the Fed right now is putting up that strong front. Oh, we're going to stop printing. Well, yeah, it's easy for them to say that when unemployment is like 3-4%, right? But ask me this, when unemployment goes to 10 or 15%, are they still going to be like, no, we're not going to print? They're going to print again. Come on.
Hey guys, welcome back to Library of Wealth. Today we have Gareth Soloway on the changes in the financial market and how Bitcoin will be affected. Soloway says that the reason why money is being directed away from the crypto industry is because many investors have already lost money. He says that crypto also lacks funding because of the absence of regulations, and currently both crypto patterns are bearish, which doesn't bode well for the industry. Even though the market is expecting a move up, the current patterns will quickly push things back down. Soloway advises investors to start preparing for the worst case scenario. Let's listen to Gareth Soloway as he gives his take on the current financial economy and what crypto's role will be in the next 30 days. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I think overall, also the other thing is that there's a lot of investors that got burned in crypto because of Celsius and because of a couple other things. And so I think a lot of money has gone towards the stock market right now and has stayed away from crypto. In addition, we're waiting for this regulation. What the heck are we going to do? We know Gary Gensler says Bitcoin's a commodity, but what the heck is everything else going to be? What type of regulations are they going to bring in? And that's keeping a lot of money on the sidelines at this point as well. So there's a lot of things that are kind of keeping Bitcoin and crypto traders on the sidelines. And I think it's going to start to become clearer in the next week or two. And I think you'll get some more volatility. Basically what you have is you have a macro pattern, and I'll do a little bit of teaching for everyone out there. So a macro pattern is basically the bigger pattern, and then you have a micro pattern, which is the pattern inside of the bigger pattern. And what you could see here is basically we have, let me get my trend lines up here. You basically have the bigger pattern. This is your bigger pattern down here, and then sideways, right? This is in spirit of what we would refer to as a bearish pattern, in spirit of bear flag. And we've now broken down again, and now you're forming a new bear flag in spirit of bear flag pattern, right? So you got a bear, a macro bear with a micro bear. So you have two bears, which is never a good thing, right? So that's a little bit scary. But what I said before is that short term, I'm a little bit bullish, and this is getting a little bit more wacky. But look at this green candle here, and then look at this mini micro. And this is getting weird, right, Frankie? So you have a macro pattern, you have a micro pattern, and then inside of the micro pattern, you have this mini micro, which is a little bit of bull, right? So you have the up move and then the sideways consolidation. So what this tells me is that the market's anticipating maybe a quick move up, but then the bigger micro pattern and the macro pattern will likely take it back down. So I guess to summarize this, you'd look for a very short term, maybe a next couple days bounce in crypto, maybe if we're lucky back to this trend line that was broken. So this would be kind of a retrace to the breakdown line right here. And then I think we roll over and the resumption of the bearish pattern takes us down to here, which is the 2017 level. And then ultimately, I honestly am still in the camp that we're still headed even lower, probably 12, 13,000 at minimum on Bitcoin. And just to be clear, that's kind of my best case scenario is 12 to 13,000. My worst case would be like 3,500 or so. So hopefully it's the best case. But again, as a trader, we always have to prepare for the best and the worst case. You just can't kind of stick your head in the sand and say, oh, I'm only going to believe in the best case. As a trader, you have to mitigate risk. So you have to prepare for the potential for the worst case.
Soloway believes that crypto's value will need to dramatically increase in order to remove all the weak players in the industry. He noticed that investors everywhere are suddenly giving up on crypto and removing all traces of it from their portfolios. He sees many players starting to become bearish and fearful. Soloway says that the crypto market is beginning to show extreme similarities to everything in the dot-com bubble.
Like honestly, 10,000 would be very good in terms of washing out a lot of the weaker hands. So for instance, I think there's a lot of investors, and if you look at Bitcoin right now, you know, we just went from 69,000 to 17.5, and I still didn't get the sense, and you might agree with this, I don't know, but I didn't get the sense that people were like giving up on Bitcoin, right? And in a bear market, that's the kicker, right? If you go back to 2009 when the stock market bottomed at like 6,600 on the S&P or whatever it was, it was like people just didn't even open up their portfolios anymore. They were like, I'm not even going near stocks anymore. But you don't have that in crypto yet, which to me says you got to go lower in this bear market if it's a true bear market. And so I'm in the camp that 12, 13,000 is the high end target. But in all fairness, it's very likely that the powers that be, the psychological breaking point is probably that 10,000 level. So I would say that you probably have to go even below that to really flush out all of the weaker hands before you get that final, bottom being put in. And I would just point to this is that I think we could agree that the crypto market in the last 12, 18 months, very similar to the dot-com bubble, if people read up on the dot-com bubble. And remember, Amazon lost 95% of its value. It went from, I think at the time, $115 to like $6.50. And then it went to $3,500. Like, think about from $6 to $3,500, what type of X that is. That's like hundreds of, 100X or whatever it is.
Yeah.
So you have to think that, Bitcoin could easily go down 95%, and then it could go up the same amount as Amazon if it proves itself to be that digital gold. So for me, I wouldn't give up on it myself. I still think that the fiat currency issue is not going away. The Fed right now is putting up that strong front. Oh, we're going to stop printing. Well, yeah, it's easy for them to say that when unemployment is like 3-4%, right? But ask me this: when unemployment goes to 10 or 15%, are they still going to be like, no, we're not going to print? They're going to print again. Come on. So I think that's the kicker, is that you just look at that aspect. And I think you have enough big money starting, like there's big names that are investing in Bitcoin to the point where I really do think there is a future for Bitcoin, even if it gets flushed out. And honestly, the key for investors is to just remember it should just be a portion of your asset allocation. It shouldn't be everything. You never want to have all your eggs in one basket. I know you preach this, but you should have your stock portfolio, your crypto portfolio, your real estate portfolio, your this, your that, your gold. And this way, if by chance it does end up being worthless, it sucks, but it shouldn't break you. I mean, if you look at past cycles, it's anything but a V shape. And the reason is bear markets tend to be in a position where you get people so scared that they're scared to rush back in, right? So it takes a while. So if we go back to the 2017 highs here, and then the bear market, you can see we even had this long period and then kind of this, and then you can see for a long time it almost went sideways before starting back up again. So you got to think that that's going to be the same sort of thing. In terms of when it will start that next bull run, the common theme would be the bear markets usually bottom out 12 to 18 months after the top. So if the top was November, this November to the following March, April, May. But my fear again is that you have to be aware that with the Fed not printing, it makes me worried that this bear market could be a little bit longer. But I think in the very least, you say 12 to 18 months before the bottom is in. At least we're getting close to November, so that's good. But that's why I still think there's more downside at minimum to get us to November.
Soloway says that Bitcoin still has a chance of showing itself to be digital gold. Even if Bitcoin gets destroyed, it still has a chance to thrive because big investors are beginning to back it. He advises investors not to give up on the dominant crypto asset, but on the other hand, because of the high unemployment rates, the issues with fiat currency are not going away. Soloway notes that bear markets are making people afraid to jump back into the financial sector. He believes that because the Fed has stopped printing currency, this bear market will last longer than people expect. What do you guys think about Gareth Soloway's opinion that we're currently in a bear market? Let us know in the comments below. Guys, thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.